Welcome back, guys, to MJ Crypto, and this is the top 5 mistakes to avoid in a bearish market. I'm going to be walking you through step by step on the tips on how to avoid these catastrophic decisions. This is MJ Crypto. If you do like what we do, click the subscribe button and let's roll, guys. Number one, in the course of actually trading in the bear market, you already know that the prices may actually range and consolidate. So the very first thing you want to do is to avoid trading your entire portfolio in one asset. This is the first step you need to take to avoid liquidation in a bear market. Avoid trading your entire portfolio in one asset. Now, I see a lot of newbies actually make this mistake quite often, and it's very sad because they do not understand how this space actually works. Now, there's what we call a portfolio spread and risk diversification. This is you actually putting your assets in putting your money in different assets, all right, to divert the risk involved in trading. All right, so it is not actually wise for you to put your entire trading portfolio in one asset. Take, for example, you have 5 assets you want to buy, 5 coins: BTC, Ethereum, Cardano, BNB, and probably maybe BGB, 5 different coins. And then out of those 5, you actually select just one and you put your entire portfolio in one. So if the price of that asset goes down, you actually get yourself liquidated easily. You get yourself what? Liquidated, because you are not trading, or rather hedging, the outcome of the price action of that asset. All right, so it is actually advisable you trade your entire portfolio on different assets if you are on what? Futures trading. Take multiple positions. Do not take one position with your entire portfolio. That is very wrong. And if you must actually take multiple positions, do not use your entire portfolio at the same time. Keep a reserve. This is actually going to help you in the long term. Number 2 on the list here is revenge trading. Do not do revenge trading. Now, what is revenge trading? Revenge trading is simply you losing some money because of your poor analysis in the futures trading market, perpetual trading, perpetual contracts, and then you lose some money. Instead of taking a break and figuring out the next possible move to take your next position, you actually just fund your account and try to recoup your losses immediately. Now, in betting, that is what we call martingale. It is you trying to recoup your previous losses by staking higher amounts. Now, when you do this, you're actually going against the rule of your risk management, and this can be very, very detrimental in the long term. So do not do revenge trading. How do you actually curb these habits? Because this is actually a habit that you need to stop. Revenge trading is very detrimental, most especially in the bear market. All right, so to actually be on the safer side, this is what you need to do. Stop when you are losing. Don't continue trading. When you are making consistent losses, stop. Take a break and then come back when the market is less volatile. Here you have a higher chance to make higher returns with your trading portfolio. But if you say you want to go into revenge trading, trying to revenge and fight against the market, listen, it is not a warfare. If you do not make profit today, it is certain you are going to make profit another day. All right, so you do not have to kill yourself over one particular trade setup. So please avoid revenge trading in this bearish season. All right, and if you must take a position, ensure you do your analysis properly. Look at the higher time frame to know where exactly the market is headed before taking a position. Number 3, please avoid high leverage. Avoid high leverage in the bear market. A lot of you do not understand how leverage works. I'm going to make a video possibly this week coming to actually lecture you all on risk management. If you want me to make that video, just type risk management in the comment section right now. All right. So please avoid high leverage. First of all, you must understand how leverage works before you use it. Okay. So do not go above 10x for the now in the bearish market. Now, the reason for this is that the market is actually very volatile and unstable. So it is not actually wise to use a high leverage in such a market setup. Anything could happen at any given point in time. You must not be greedy. It's not a matter or a function of the leverage you use that gives you money in the crypto space. No, it is basically your analysis. Leverage is just simply a debt finance. It is you asking Binance to give you some extra money to trade. That's why it's called a contract. It doesn't necessarily mean the higher the leverage, the higher the money or the returns you're going to make. No, it could actually be the higher the leverage, the higher the money you may lose. So it's a function of your analysis, your trade setup. So do more research on how to get the best trade setups and your trading style. I talked about trading style in my previous video. The link is in the description of this video. Go and watch it. Know the kind of trader you are so you do not find yourself in a debt trap. So please, for the now, avoid high leverage. Anything above 10x is actually too risky for the now. But if you are very skilled and you know what you're doing, why not? You can go for high leverage if you know what you're doing. But for a beginner or a newbie or someone who's just an average Joe in this space, please avoid high leverage to prevent yourself from liquidation. In a normal trade setup, a retest is very important because a retest is more like a confirmation about the direction of a trend. So always wait for a retest before you enter a position. I'm talking about those who actually do technical analysis. Now, once you do technical analysis, you found your breakout, it is not wise to actually just start trading at CMP. When I mean CMP, I'm talking about current market price. So the best thing to do is actually to wait for a retest on that particular support or resistance that the price has broken out from. If it's either the upside or the downside, always wait for a retest. Now, I often tell all my students that successful traders are not mostly skillful traders. They are actually patient traders because money flows from the impatient traders to the patient traders. You are into a trade, you want to take a position, the price is going up, you've already seen it, but you're not patient enough for the price to actually retrace to a favorable place for you to buy. You just enter, just take a position. That is wrong. Totally wrong. Always be patient enough to wait for a retest, which is called a confirmation. Now, if the price breaks out from a resistance, wait for it to go up and hit that previous resistance zone, which will serve as a new support. So once you find that basic confirmation, it is most likely that you're going to be risking less to gain more because you already know the price is going up and it has made a retest back to the previous resistance which it broke out from. This is the safest way to trade in the bear market. I'm sorry to burst your bubble, but the dumbest thing you can ever do, even in a trending market or a consolidating market, is to trade against the trend. That is the dumbest thing any trader can do out there, except you are trading a reversal. Now, the trend is always your friend. Do you agree to this? If you do agree, I want you to smash the like button right now. Smash the notification button after hitting on the subscribe button. That is a confirmation that you are with me and you like what I'm doing right now on this channel. I'm opening your eyes to certain things. Do not trade against the trend. This is the fundamental principle. Do not what trade against the trend. Now, the crypto space is actually very volatile because it is open 24/7. It is open what? 24/7. So the whales have access to this market 247 and they can do whatever they like. They can buy so much volumes and push the price up, or sell so much volumes and push the price down. So the best and easiest way to make money consistently is to trade alongside the big guys. When I say the big guys, I mean the whales, the institutional traders. These are the guys who have so much money to what spend. So trade alongside with them. Don't try to be funny. Don't try to trade against them, because it is not going to be what favorable. Do not trade against the trend. Always trade alongside the trend. It is safer for you. It is wiser, and it's actually more favorable because you're going to make more money in the long term. So cheers guys, remember this is MJ Crypto. We drop valuable content here to enable you have a bearing in the futures market aspect of trading. We also do spot trading, futures trading, which is perpetual contract. And if you need some good mentorship and profitable signals to help you scale up your profit, build your portfolio, kindly send us a DM. The link to that is in the description of this video. Contact us through WhatsApp. We respond swiftly. Cheers, guys. I'm going to see you on the next video in a couple of days.